So if these guys go belly up, right, that's always a possibility. I mean, there's a ton of layers between where we start an investment in a scenario like that. But let's just take it full nuclear. Chapter 7 bankruptcy, they shut down, everyone goes home. I don't know if it's a secret here, but I would say going right down to the fundamentals of the real estate, buy right, right? You're protected from a lot of downside scenarios if you have a really defensible basis on the real estate, right? At the end of the day, again, we're dealing typically with single tenant properties, and I don't own a corporate bond with, Joe's Manufacturing Corporation who does 200 million a year in revenue, right? I don't have a corporate bond there. So if these guys go belly up, right? That's always a possibility. I mean, there's a ton of layers between, where we start an investment in a scenario like that. But let's just take it full nuclear. Chapter 7 bankruptcy, they shut down, everyone goes home. What am I holding? What's the asset that I'm invested in? And it's the real estate, right? I have this great collateral here, and that collateral is only as strong as the basis that you bought it for. So if I'm, well above market or at replacement cost, who's going to buy a 30-year-old building, if it's near the same cost as a brand new building, right? Replacing that. Or where can I position myself for asking rents if I do need to re-tenant a property because I lost a tenant? So all that's going to come down to the basis. Hey, how much room do I have here? Can I attract a tenant with low rents, or can I potentially see upside, right? Hey, I leased this to the last tenant at $5 a foot. If that full, downside scenario comes to pass and I have a vacant property, maybe if markets are at $6 or $7, now imagine I bring someone in a market. I just saw a 20% increase in NOI. So you want that ability to work through what could be a tough scenario very easily.
I think a good way to say it, maybe Drew, correct me if I'm wrong, is you don't want to let the lease tenant wag the investment real estate dog, right? In other words, just because you have a great tenant doesn't necessarily mean it's great real estate. You want to make sure you have both so that just in case the worst happens at chapter 7, bankruptcy, right? That you have the ability to re-tenant it with a new tenant so that you can continue to create and preserve more wealth. Drew, is that a fair summary of what you're saying there?
Yeah, absolutely. And there's always a trade-off. And I think, our experience, leads us to have a really good understanding of the relationship between tenant credit, location, the actual real estate basis, and the yields, right? Because, you could say, hey, I want a great tenant, great location, great yields. Well, that typically doesn't exist, right? I can't go get an Amazon warehouse in downtown Phoenix and see 10% cash on cash, right? It doesn't exist. That's an institutional product that trades at a very low cap rate, and it's a low yield because there's low risk, right? There's a lot of money looking around at these. So, I'll jump into it in a minute, but we found a way to kind of find our little slice of arbitrage and really find for my money, the best risk adjusted return you can find.